Singapore, 1996. From humble beginnings, a new player emerged in the offshore oil and gas industry. Swiber Holdings. Founded by Indonesian-born tycoon Raymond Goh, the company started small. They provided maintenance services to offshore platforms. In those early days, the company was just a modest operation, with a handful of employees working tirelessly to carve out a niche in a highly competitive market. The offshore oil and gas industry was still in its nascent stages in the region, and opportunities were ripe for those willing to take risks and innovate.
But I had bigger ambitions. I envisioned Swiber as a major player in the booming energy sector. I knew that to achieve this vision, we needed to think beyond just maintenance services. We needed to diversify and expand our capabilities. This meant investing in new technologies, acquiring state-of-the-art equipment, and most importantly, building a team of skilled professionals who shared my vision and passion for growth. Our strategy meetings were intense, filled with brainstorming sessions and meticulous planning. We set our sights on becoming a one-stop solution provider for the offshore oil and gas industry.
Swiber strategically acquired vessels and equipment. They expanded their services to include engineering, procurement, installation and construction, or EPIC. Their timing was impeccable, the world craved energy, and oil exploration was pushing further offshore. Swiber was perfectly positioned to capitalize on this growing demand. The company's fleet grew rapidly, and with it, their reputation for delivering high-quality, reliable services. Each new project brought new challenges, but also new opportunities to showcase their expertise and commitment to excellence. The offshore oil rigs and vessels became symbols of Swiber's growing influence in the industry.
Under my leadership, and with our aggressive growth strategy, we began to attract attention. Our bold moves and strategic decisions did not go unnoticed. Industry leaders and competitors started to take note of Swiber's rapid ascent. We were no longer just a small player. We were becoming a formidable force in the offshore oil and gas sector. Our success was a testament to our unwavering dedication, innovative approach, and the hard work of our entire team. I often spoke at industry conferences, sharing our journey and inspiring others to dream big and pursue their goals with relentless determination.
Swiber secured contracts in Southeast Asia, the Middle East, and even the North Sea. They were quickly becoming a global force. Investors were impressed by their rapid expansion and strong financial performance. Swiber's star was on the rise. The company's ability to secure high-profile contracts in diverse regions was a clear indication of their growing influence and capability. Each new contract brought with it new challenges, but also new opportunities to demonstrate their expertise and commitment to excellence. The energy sector was booming, and Swiber was at the forefront, driving innovation and setting new standards for the industry. Investors celebrated Swiber's financial success as the company's stock prices soared and their growth graphs showed a steady upward trajectory. The investment boom in the oil industry further fueled Swiber's expansion, allowing them to reinvest in their operations and continue their aggressive growth strategy. The company's financial performance was a reflection of their strategic vision and operational excellence. Swiber's journey from a small maintenance service provider to a global powerhouse in the offshore oil and gas industry was nothing short of remarkable. Their story is a testament to the power of vision, hard work, and the relentless pursuit of excellence. By the mid-2000s, Swiber was flying high. Oil prices were soaring, reaching unprecedented levels. The global demand for energy seemed insatiable, driven by rapid industrialization and economic growth in emerging markets. This created a perfect storm for companies like Swiber to thrive. Swiber rode the wave of this energy boom, securing increasingly larger and more complex projects. From offshore drilling platforms to intricate subsea installations, Swiber's expertise and capabilities were in high demand. Each new project was a testament to their growing reputation in the industry. Their fleet of specialized vessels grew, each one a testament to their success. These vessels were equipped with the latest technology, enabling Swiber to undertake challenging projects in some of the most demanding environments. The expansion of their fleet was a clear indicator of their ambition and forward-thinking approach.
In 2008, we reached our zenith. The atmosphere in the office was electric, filled with a sense of accomplishment and pride. We had worked tirelessly to get to this point, and it felt like all our efforts were finally paying off. We reported a record revenue of over $1 billion. This milestone was not just a number, it was a reflection of our hard work, strategic planning, and the trust our clients placed in us. The stock market responded positively, and our shares soared to new heights. Our operations spanned the globe. From the Americas to Asia, we were involved in some of the most significant energy projects worldwide. Our ability to operate in diverse and challenging environments set us apart from our competitors. We had become a true industry giant. Our facilities were state-of-the-art, and our infrastructure was second to none. We were not just participating in the energy sector, we were leading it.
Goh, the visionary leader, was hailed as a genius. His strategic foresight and ability to navigate the complexities of the energy market were unparalleled. Under his leadership, Swiber had transformed from a modest company into a global powerhouse. He had taken Swiber from a small Singaporean company to a global powerhouse. The journey was nothing short of remarkable. From humble beginnings, Swiber had grown exponentially, expanding its footprint across continents and establishing itself as a key player in the energy sector. Swiber's success story was one for the books. It was a tale of vision, perseverance, and relentless pursuit of excellence. Business schools and industry analysts often cited Swiber as a case study in successful corporate strategy and execution. They were winning awards, attracting top talent, and seemingly unstoppable. The accolades kept pouring in, and the best minds in the industry wanted to be part of Swiber's journey. The company culture was one of innovation, collaboration, and a shared vision for the future.
With my trademark confidence, I spoke of even greater ambitions. We were not content with our current success. We aimed to push the boundaries further. Our goals were audacious, but we believed in our ability to achieve them. Swiber would become a dominant player in the global energy market. The future seemed limitless. We envisioned a world where Swiber was synonymous with innovation and excellence in the energy sector. Our journey was far from over. In fact, it felt like it was just beginning.
But amidst the triumph, cracks began to appear. Swiber's rapid expansion had come at a significant price. They had taken on massive debt to finance their rapid growth. Whispers of concern began to circulate among industry analysts.
Was Swiber growing too fast? Were they taking on too much risk? Some questioned the sustainability of their aggressive borrowing strategy.
Swiber dismissed these concerns, pointing to their strong order book and the continued high demand for oil. They argued that their debt was manageable. After all, they were Swiber, a rising star, destined for greatness.
However, the doubts lingered. A few cautious investors began to reduce their exposure to Swiber. Still, the majority remained confident in Goh's leadership and the company's prospects.
The party continued, but the music was about to stop. By 2014, the global oil market was beginning to shift. The once stable landscape of high oil prices was starting to show signs of volatility. Analysts and investors alike were caught off guard as the market began to experience a downward trend. The price of oil, which had remained high for years, started to decline. This decline was not just a minor dip. It was a significant drop that sent shockwaves through the industry. The ramifications were felt across the globe, affecting economies and businesses that had long relied on the stability of high oil prices. This was bad news for companies like Swiber, whose fortunes were closely tied to the price of black gold. Swiber, a company heavily invested in the oil and gas sector, found itself in a precarious position. The falling oil prices meant reduced revenues and increased financial strain.
As oil prices fell, so too did demand for Swiber's services. The company, which had thrived during the boom years, now faced a stark reality. Clients were cutting back on projects and new contracts were becoming scarce. The once bustling oil rigs now stood as symbols of a bygone era of prosperity. Suddenly, those massive debts that had seemed manageable became an albatross around Swiber's neck. The financial reports painted a grim picture, with mounting unpaid bills and dwindling cash reserves. The company's financial health was deteriorating rapidly, and the weight of its debt was becoming unbearable. The company's cash flow dwindled as projects were delayed or canceled. The once steady stream of income had slowed to a trickle, and the financial strain was evident. The stock market reflected this turmoil, with Swiber's shares plummeting and investors losing confidence. Swiber was caught in a vice. The pressure from creditors, the declining market, and the internal financial struggles created a perfect storm. The company's leadership was under immense stress, trying to navigate through the crisis with limited options.
They desperately needed new contracts to generate revenue, but the declining oil price was making clients hesitant to commit. The pressure mounted. The construction sites that once buzzed with activity were now eerily silent, with for lease signs becoming a common sight. The uncertainty in the market made it difficult for Swiber to secure the deals they so desperately needed. Swiber began to scramble, desperately seeking ways to stay afloat. The boardroom became a hub of frantic activity, with executives brainstorming and exploring every possible avenue to generate revenue. Meanwhile, the reality of the situation hit home for many employees who began packing up their belongings as layoffs loomed.
They tried to renegotiate loan terms with their creditors, but to no avail. The banks and financial institutions, wary of the risks, were unwilling to offer leniency. The negotiations were tense and unproductive, leaving Swiber with few options. The walls were closing in. The once thriving corporate office now felt like a ghost town, with empty chairs and dim lighting reflecting the company's dire situation. The future looked bleak, and the once promising company was now on the brink of collapse.
In 2016, the unthinkable happened. Oil prices, which had already been falling, absolutely plummeted to unprecedented lows. The bottom fell out of the market, leaving everyone in disbelief. Energy companies around the world reeled from the shock and uncertainty.
For Swiber, already teetering on the brink of financial ruin, it was a death blow, sealing their fate. With oil prices at rock bottom, the situation was dire. Demand for their services evaporated almost overnight. Projects were put on hold indefinitely. Existing contracts were cancelled without notice.
Swiber's once impressive order book was now a mere shadow of its former self, a ghost of past successes. The company was hemorrhaging cash. Panic set in among the ranks.
Investors, once so eager to share in Swiber's success, were now desperate to cut their losses and salvage what they could. Swiber's stock price went into freefall, plummeting rapidly. The company that had once seemed invincible was now on the verge of collapse, a shadow of its former glory.